going on, guys? 360 Digital Closing Bell here. Daily Energy Market Summary. Episode number 130 here on this gorgeous Friday, October 2nd, 2020. We're live on YouTube from an undisclosed location here in Denver, Colorado. As always, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, international news aficionado, international man of mystery, and right now, I don't even know where he is, Stuart Turley.
Hey, good morning there, Michael. It's a beautiful day in the neighborhood, and I'm lost.
He just sat down. I was dying, everybody. He just sat down before we started doing the show with a green screen cover. It was hilarious. So welcome to the show. Man, it's a busy week, Stu. Holy smokes.
It's Casual Friday.
It is casual, but it's also, man, it's been a busy week, man. We've had so much interesting stuff happen this week. If you want to check out all of the news that happened this week or missed any of our daily shows, please go check out our week-long our week look back podcast. We put it on the Oil and Gas Show via iTunes, Spotify, or YouTube. The best way to kind of catch up all today. Today, I mean, kind of slow. We actually coming to you a little early today, getting you to that hall pass early. EP Energy announces successful financial restructuring. U.S. rig counts increased by 6. Domestic oil prices absolutely tank off the back of none other than our President Trump, who is now tested positive for coronavirus. We will cover all of that, which has affected the energy markets. Stu's got some stuff with international news. But first, guys, just subscribe. 360 Digital Closing Bell, iTunes, Spotify, YouTube. The best way to stay up to date on all of your energy market news. Check us out on the 360 News Desk page, Daily Energy Market Summary. Be the best place for all of your energy finance. So as I mentioned, all major industries pretty much down. NASDAQ down about 2.5 percentage points. Dow Jones about 0.75 percentage point. And SPY about 0.75% off the back of President Trump announcing he has tested positive for coronavirus. We covered it in our podcast this morning as a quarter. We actually saw that tweet live on the podcast. Not a good sign for markets. I mean, they, obviously the markets think this is a little bit of, I'm going to take this negatively. Futures markets love to trade off this type of stuff. There was some other news that I think really held up markets today. We also heard that 2.2 stimulus bill that's on the House Democrat side was actually passed. Secretary Mnuchin has countered with a $1.6 trillion stimulus plan. So there's hopes that they have some room to work on. Airline stocks got a huge bump today after Nancy Pelosi said came out and said we need to stop the furlough and that this new bill, whoever it is, will have direct airplane benefits regardless of what happens. So big boom for them. United, Delta, and Southwest all up at least 3%. On the crude oil side, man, it's been a rough day. 3.5 percentage points on that front month contract, 2.5 percentage points on that back end, 37.24, like I said, for the front, 40.39 for the back. At least we were able to stay above 40 on that back end. Long-term demand fundamentals just do not look good. Like I always said, if you want to know whether it's a daily blip in what's going on with the price of oil or whether it's long-term fundamentals, just take out that 12-month strip. 2.5% on that backside. Not a good day. 12-month strip for natural gas. Did about 1.6 percentage points on the downside, now trading below $3. So all of a sudden, this $4 gas we were supposed to see, I don't know about that front end of the curve, $2.51. That's about a 4.5 or a 0.4% drop. XOP, which are E&P securities contract, get this, up 1.5%. Good to see there. OIH, Oilfield Services, up to 96.59, which is about 2.5 percentage points. Liberty was up 8 percentage points today. I think that interview we did with Ron Guys continued to get circled around in those fields. When we look at the equities on the upside or downside, Camber Energy down 6.5 percentage points, 58 cents. Valco Energy down 7.5 percentage points. Sanchez Midstream Partners down 8.5 percentage points, despite a great looking website. On the upside, Tensico Gas, 82 cents. That's about 9.5 percentage points. Centennial Resource Development up to 63 cents, 9.5 percentage points. And holy smokes, Stu, off the back of Chapter 11 bankruptcy, Lone Star Resources trades up 50 percentage points today.
Wow.
You know what that means? Funeral was long overdue. People were waiting for this death for a long time. This is like that marriage that people are waiting out 15 years because they want to swoop in. You know what I mean? 50 percentage points off the back of Chapter 11 bankruptcy. Woo, 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 woo. What do you got on the international news desk for us?
Hey, we have been swamped this week. And one of the things this morning, our podcast this morning was fantastic with the whole Club Med summary this week of all the turmoil in the Mediterranean offshore. Hey, this morning the EU put sanctions on Belarus, who is one of the key folks in Turkey. They're putting it on an individual rather than a country and several companies. They are not going to be able to enforce this.
No, they won't. They will not be able to enforce this.
No, but it goes back to Turkey is not playing nice in the sandbox. They're getting OPEC all upset. They're getting everybody else upset. So it should be quite entertaining to see what the EU does to spank Turkey in the nose with a rolled up newspaper. All right. Second one. Okay, there's a Friday note for us. Poof. All right. And then we have big shares on all the big boys. We've had BP, we've had all the others, and I think it's kind of funny when you sit back and take a look at I think they're going nutty. I think they're smoking something, and the reason they're smoking, it's not a cigar, and the reason is because they've gone totally electric. They're trying to go to electricity rather than oil, their base, and so they're bringing in all this stuff. You talked about this. And there's now a major buy on all the major European oil majors. And the majors are struggling to convince any investor at the moment, said Jason Kennedy, analyst at Santander. Now, what are your thoughts, Michael? Because I really
What are my thoughts? I told you what I really thought of it in the pre-show. What I'll say here is, I think it's a disservice to his client base to put out that type of a buy on all European majors. I can't get behind that.
No, I can't either, dude. So
but it's interesting, and I think there's different reasons why you're seeing this shift. I think specifically I think some companies are, because what I'm trying to put this all in perspective here. I mean, I saw this on CNBC earlier today, Stu. We talk about markets are down 2.5 percentage points today you're talking about tech stocks, SPY overall indices down about a percentage point. The two sectors that are doing best, industrials and utilities. So I'm telling you, lower but more stable returns are always found in utilities. What are all these majors basically telling us they want to turn into? Utilities. Why? Not because they really want to be ESG compliant, mostly because they think, why are we subjugating ourselves to a commodities market that does this when we could just go get ourselves into a nice 6 to 10% return? I mean, look what these midstream companies do. Midstream earnings were disgustingly good throughout COVID. I mean, we saw them. We recovered them. It was odd. Williams Corporation, 9% revenue quarter to quarter through COVID.
All right. Now, who do you not yell at? You don't yell at your doctor. You don't yell at your plumber, and you definitely do not yell at your internet provider. So what the Exxon and Shell and everybody's going to become electrical folks, but they're going to be Club Disney. They are going to be pumping out cable TV next.
Well, I think they're just making the move to the utilities company as a bridge to make sure they're around for another 300 years. Because we'll always need electricity. Will that electricity always be generated by natural gas or oil and gas? Probably for a while. But, I see the pivot they're making. Do I agree with it? No. But, hey, I see why they're doing it. It makes sense on paper.
Well, Chevron's the only one that's not doing it as much. So it's fun to see Exxon, Shell, BP, and Chevron in that mix. So it is fun to watch this play out, Michael.
But what is funny is these buy signals are all on European oil majors. Now, it's probably because that's who he covers. I'd be interested to see what his rating is on U.S. oil majors.
I wonder if there's a conspiracy going on here.
I don't think there's a conspiracy. I would just be interested to see what that. If you're bullish on every single European oil major, oh, cool. Is that all you got on the international side for the day?
I'm exhausted.
It was a busy week. So when we look on the U.S. shale side, and a couple things as we mentioned, oil's down to 37.25, really off the back of just really terrible demand numbers. We covered this, the podcast this morning. OPEC's been cheating not only for months, but it's now just becoming in light. On Tuesday, Libya came out 240,000 barrels over what they thought. Iran came out yesterday and talked about how they were over what they were supposed to cut in because they were over like 400,000 barrels of what they were supposed to cut, and those cuts that they were supposed to do was what were in response to them not cutting to begin with. So, I mean, we're talking about so much production that was supposed to come offline never really happened. I think that's why you're seeing oil prices thing. You should check out all of the worldwide oil production numbers. Go to 360, go to oilandgas360.com. Check out our dashboard tab. You're going to be able to see worldwide production on a month-by-month historical basis for all of your OPEC providers, non-OPEC providers. Most of it is available most of it is available for just our premium subscribers. I think it's like $60 a month. I mean, it's honestly a steal. It's honestly a steal. You're losing money not purchasing it. Really, I think there's that. I think I went on their website this morning. They got a 1-for-1 buy one subscription. You get it for $1 for the first month. I mean, why would you not just do that? Just sign up now. No, do it. You'll be able to find all of this data that we're using to pull this stuff. Rig inventories or rigs came out today, excuse me. They're up 6. So, normally that would push oil prices up. Guess what? Doesn't. Which is pretty just weird to think about. 261 working rigs. Canada had 7, and Canadian had an increase of 7, which is good to see. About 71 rigs. Kind of give you a little background here. Eagle Ford had a 3 rig count increase. Marcellus had 1. Permian up to 125 rigs. That's 2. Utica had 1, and Williston stays the same, still running about 10 rigs. There are 4 rigs running in the DJ. No increase there. And Oklahoma's slowing down. They only got 7 rigs in Oklahoma, Stu. Holy smokes.
Oh, yeah. That's a good thing I'm in Dallas.
The last thing, the last thing that I think we need to cover today is our friends over at EPFF, quote unquote, successfully completed financial restructuring. Well, they've done it. The question is, will they be back at it again very soon? As remember, they had a pre-petition debt of about $4.4 billion. They've emerged from Chapter 11 bankruptcy. Quote, well-positioned to generate material cash flow. I love to do this. You just go through a press release and what do investors want to hear nowadays? Free cash flow? Just do Control F on their press release and find free cash flow. It's almost like the person who wrote it was like using SEO terms. They just got to put it as many times as they can so Google picks it up. It was someone on Twitter pointed that out. They're like, someone go do Control F on all of these things. What do investors want to see? I guess free cash flow. It's just kind of funny. As we mentioned, they have a new $629 million senior secured reserve-based loan facility, and the company has already rounded up from all of its loan lenders. Its 3-year RBL facility is backed by a $650 million borrowing base supported by the company's oil and gas reserve. They also have $200 million in available liquidity now, approximately $400 million of net debt. Great! EP Energy, time to become a sponsor. Seems like you've got some liquid cash on you. That'll be good. Might as well. We missed anything today, Stu?
No, it's just you got a hall pass.
I do have a hall pass here. We're coming to you a little early today just because why not, guys? Get you out of here, get you to finish your day. Is that an Astros hat?
No, it is a Oklahoma State Cowboys and a Dallas Stars. Want to give a shout out to my Dallas Stars, even to make it to the 6th game of the Stanley Cup. They lost.
They say if you ain't first, you're last, Stu, so you finish in the same place the Avs did, not winning the championship.
But they got to the dance.
Yeah, you're right. That's fair. I'll give you credit. And with that, guys, we're going to go ahead and let out of here. Give you the hall pass. Finish up your day. Thank you for checking out the 360 Digital Closable Daily Energy Market Summary here on the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Turner. Thank you for checking us out. We will see you guys Monday morning for a week ahead podcast and in the afternoon for the Digital Ticker.